Bitcoin, cryptocurrencies, blockchain. These days, this industry is making a very big news. Yes, these days, very big news. It's everywhere. An industry that is now attracting institutions, banks, states, individuals. Everybody is trying to cut some portion of this gold, digital gold. Everybody is trying to cut some parts or some portion of it. So we want to talk about a little this Bitcoin. We want to talk a little about Bitcoin, and we want to touch a whole lot of things. We want to touch some points, some key points, like things like what is cryptocurrency, what is Bitcoin, blockchain, how blockchain is created, when to trade crypto, type of trading, try to invest in cryptocurrencies, and the genesis, how come we come to, what happened before we now at the stage where we have to talk about Bitcoin today, or use Bitcoin to do this. Bitcoin is changing the finance landscape. Bitcoin is taking over fiat and all this. So in this video, that's what we are going to talk about. And if you are new to the channel, please subscribe to the channel and turn on all notifications, like and share this video. If you have any comment, any question, please drop them in the comment box, and then we'll kindly attend to them. So stay tuned.
Blockchain and cryptocurrency. What is cryptocurrency? It is all encrypted decentralized digital currencies such as Bitcoin, Ethereum, USDT, Dogecoin, Tron, ADA, Binance, etc. By definition, currency means a medium of exchange or store of value. And crypto means cryptography, that is data encryption. Ensures security of transactions. So cryptocurrency is a digital form of cash, with a primary function to work as a medium of exchange or store of value within a peer-to-peer economic system, with cryptography to verify and secure transactions, and to control the creation of additional units. What is blockchain? A blockchain is just a chain of databases in a network connection through nodes. You could create it in a spreadsheet with a minimal effort. But these databases have some particularities. First, blockchains are append-only. That means you can only add information. You cannot click on a cell and just delete stuff you have already added or change it anyway. Second, each entry, called a block, is cryptographically linked to the last entry. Meaning each entry must contain a sort of digital fingerprint, hash. And since each fingerprint points back to the last one, you end up with a chain of blocks, blockchain. In other words, blockchain means decentralized ledger or distributed ledger technology. That is no need for a third-party intervention to approve transactions. How is cryptocurrency created? Cryptography is used to create digital coins and secure transactions. Cryptos are open source and their transactions are based on blockchain technology. The creation of coins is like mining. Mind you, we are not using pickaxe and digger here. To mine a coin, one needs to solve complicated mathematical equations, math puzzles, through huge computers. Once an equation is solved, 6 to 12 coins are generated. It is said that the process consumes a lot of power because it uses powerful huge computers. In actual practice, the Bitcoin blockchain or network has 1,800 servers distributed around the globe. We can see a server as a mining facility or warehouse. So the servers are to solve the puzzles called in technical terms cryptographic hashing function. Approximately, one puzzle is released every 10 minutes on the Bitcoin network. That is about 144 puzzles a day. And anytime a puzzle is solved, 12.5 Bitcoins are generated. So 1,800 Bitcoins can be mined a day. but it is said that only 0.4 to 1% of the puzzles are solved by most servers. Where to trade cryptocurrencies? Cryptocurrencies are traded via wallets which are used to store, send and receive digital currencies. Most coins have an official wallet or a few officials recommended third-party wallets. Note that most wallets propose interest on cryptos when you keep them for a while. This is called staking. What types of trading do we have? In the crypto world, we have spot trading, peer-to-peer trading, margin trading, and futures trading as the main ones. Refer to our video on Binance Guide. Why invest in cryptocurrencies? At its creation, Bitcoin's value was less than $1. On May 21, 2010, the first official and historical transaction with Bitcoin was recorded. Indeed, Laszlo Hanyecz, an IT developer, exchanged 10,000 Bitcoin for 2 pizzas valued at $30 American. That is $0.003 for 1 Bitcoin. Let's look at the evolution of some cryptocurrencies over time on CoinMarketCap or CoinDesk.
Let's see here the evolution of Bitcoin so far from the beginning. Everything started somewhere in 2008, when the white paper was published for Bitcoin, and from there 2009, by somewhere end 2008, so 2009 things started small. But let's see the evolution of Bitcoin. As I was saying, that it has actually taken value increase over time. Bitcoin becomes now a gold, digital gold. To say it's a digital gold today. So let's see from the beginning. Somewhere here it should be 2009, 2010, but it started here like 2011. So 2011, let's see 2011. So 2011, 6 October 2011. Here the graph started. 2017, 29 September, $5. Okay. But by the way, that's how we are saying why is it important to invest in this. It's actually important to try investing in cryptocurrencies. I'm not giving any advice. Do your own research before committing anything to the industry. But my point is that this video we're talking about Bitcoin, the start of Bitcoin, how it has actually evolved over time, and then we are showing the graph here from somewhere. Even the video we mentioned that in 2010 the first transaction happened in May 2021. In May 21st May 2010, where an IT guy bought 2 pizzas with 10,000 Bitcoin. 2 pizzas worth $30 with 10,000 Bitcoin. So around 2010, year 2010 now, and when the first transaction happened, the Bitcoin, 1 Bitcoin was 0.003. So over time, let's see how about $5, that is 2011. Okay, 2011 to 2012, 4 October 2012, 11, 2013, 128, 14, 490, etc. So that's how Bitcoin has evolved over time with increase in value. See the price here, 2018, February 2018, 9,142. Then where is here 2020, 10,575. That is 3rd October 2020. And then 2021, October 20. October 2020 was 9,000, and then here we are 23,132. That is December 2020, and then there's a peak here, which is 51,000 2021, April 2021. Then another peak here, which is 64,000. That is 30 November 2021. So that is the evolution of Bitcoin from $0.003 one Bitcoin for 0.003. And now today, one Bitcoin is around 42,000, as you can see here, 42,000. And then the all-time percentage, you can see the all-time percentage that is almost 66 million percent. My goodness, 66 million percent. Guys, that is why it's very important that this coin called Bitcoin, which is now becoming a focus of big institutions, banks, states, it's very important to actually look at it when trying to buy assets. Okay, so that's it.
The graph shows that despite the volatility, the values have appreciated over the period. This is due to their high demand for transactions. Cryptocurrencies are digital assets or financial instruments. They are market and news sensitive. We can remember the effect on the crypto market when Elon Musk announced his willingness to accept some cryptos against his electric vehicles. Yes. Today, we can say that cryptocurrencies are here to stay, as they gain more territories. They find their way to more nations' financial transactions. On the 15th of June 2021, El Salvador became the first country in the world to pass a law that accepts Bitcoin as a legal tender, meaning businesses all over the country are to accept Bitcoin in their transactions. And citizens are allowed to pay taxes with Bitcoin. On the 21st of April 2022, the Central African Republic became the first Africa country to also pass a law that accepts Bitcoin as a legal tender. Genesis of Bitcoin. Bitcoin was launched in January 2009, just after the year 2008 subprime crisis by Satoshi Nakamoto, pseudonym, whose real identity is unknown to date. To summarize the subprime crisis, it is a multinational, global financial crisis that led to a big recession in the United States. With 1 million jobs lost, household spending cut, with huge debts, and the closure of some financial institutions in September 2008. In fact, it was about housing price speculation. A lot of individuals and businesses took loans to invest in housing projects. And in the end, the demands dropped, resulting in borrowers' inability to honor their obligations. Even the numerous collaterals lost value. Financial institutions became cash traps and were unable to pay common depositors money. So Satoshi came out with Bitcoin as peer-to-peer online currency or electronic cash system. That is, everyone should be his or her own bank. Meaning that all transactions happen directly between equal independent network participants without the need for any intermediary to facilitate them. According to Nakamoto's own words, is to allow online payments to be sent directly from one party to another without going through a financial institution. Advantages and disadvantages of cryptocurrency. As an advantage, we can take Bitcoin as the best known cryptocurrency. It is a decentralized digital currency. It exists electronically as computer code. Bitcoin as a cryptocurrency is a medium of exchange. Crypto means data encryption and ensures the security of transactions. No physical counterpart is needed. It can be used to buy goods and services. Blockchain technology enables the existence of cryptocurrencies. It operates across a vast network. Blockchain is not exclusive to Bitcoin and cryptocurrency. It can be used to send messages, documents, images, videos, etc. We would like to underline here that Leonardo da Vinci School in France manages its students' certificates on blockchain technology. As a disadvantage, transactions of cryptocurrencies are not reversible. Cryptocurrencies are highly volatile and open source. Because data is stored on phones and computers, it can be hacked. Thank you for watching.